Bank of A says expenses will be flat. State Street up 1 to 2. Citizens up 3. Nowhere near the 6 out of J.P. Morgan.
No.
So maybe that's less about wages and more about the structural technological change that Diamond is seeking.
I'm so glad you mentioned that, because one of the things when I talk about with Brian Moynihan, I'm fascinated. I bank with all these guys. I'm fascinated by how much money they have spent on technology, and they've been bragging about that for years. Because remember, it used to be that only younger people transacted with their cell phone. Now it's like, octogenarians do that. So they spent all the money, and it's like when Jamie Dimon started, it was like, all they did was cut expenses, and they were crushing it. Whereas Bank of America was adding expenses. Well, now, suddenly, they've got the deposits, the Fed's going to raise, and they don't have to do anything. They just make more money. It's kind of like 1982, when Greenspan said, we ought to let the banks make more money.
Well, still, though, mortgage business, you got a downgrade of just about every major home builder today at a key. That's going to hurt. We've got mortgage rates up 4 straight weeks.
It turned out that Rocket Mortgage, it turned out that, David, that the robo-mortgage companies with AI have been taking that business away. The real good business is checking account, because I don't know how much you get in your checking account.
I think it's 0.00.
It's you're
Last
making
I
a
checked.
fortune.
Maybe it's 5 cents a month.
Yeah, well, how much?
Actually, 5 cents.
Well, I love the fact that they're charging you and making more.
Yeah.
I want to be in that business, right? David, how much risk is there to charging you for your credit, for your checks, and making on the credit path? That's what I call a good business.
It's a very good business. And getting back to Bank of America, they had a very good business. I don't want to overlook the fact that they made $32 billion last year.
Everyone else.
These stocks all moved up last year, some more than others, other than Citi. They all actually moved up sharply in the first week or so of trading for this year prior to the beginning of earnings season. And now we've had a downdraft, so making up a bit of what was just lost. You can see it right there. But they're coming off a record year now.
They made so much money. Now, Goldman, people are looking for, they're making about 60.
He loves coming back
billion.
to Goldman,
Now
doesn't he? Just can't help himself.
No, because
he's
people
such a homer still.
People are looking for $40 billion. They did $60 billion, now with $40 billion. Like what's going to happen? In the thing, the world's going to fall apart. And then, David, the new normal is that it's bad.
All right, what's the right multiple then for?
Well, it's better than 7
for these banks.
Goldman's is 7,
particularly if they can maintain these returns on tangible equity that we're seeing right now.
Well, Goldman has beaten every other bank on 1, 3, 5, and 10 book value. I think that's apples to apples. And David, I'm not going to pay forever 7 times earnings for Goldman Sachs.
All right.
Well, you've also been critical of the consumerization of Goldman.
Well,
You're
that
not
I
a big
don't
fan
like.
of Marcus.
They claim that they're making money on Marcus, and when you go into that credit card business, you don't make a lot of money for the first 5 years, and so I don't like that. But the Apple credit card, it's possible that people sign up. I just want to understand. You got Marcus, you got the credit card, you got the wealth management business, and it's a pastiche, if not a mosaic of things. That's a line I like to use a lot.
I know you do.
Yeah.
Do you want to talk about Morgan Stanley at all?
No, first I want to know, are you wearing 2 suits?
No.
You have 2 suits on today.
I'm not wearing 2 suits.
Would you dress in the dark?
Yes, I often do. At least I'm not sitting here chomping away on saltines because I had a late night at Le Bernardin. Okay.
Wait, so why don't you just reveal that I had a late night at Bernadette?
Yeah, wow. You went there, I'll go there.
I guess the safety is off this morning.
It's off.
Well, can
we talk about Morgan Stanley? How about that?
No, I didn't have dinner with Morgan Stanley. I had the caviar. How about that? I had a mountain of caviar that was the size of, Everest.
That's horrible.
But Barchet
finally got an open table seated diner.
Yes, and I had a great time, and no one next door to us got angry that we laughed so much. Okay,
and no masks, I assume.
No masks.
Okay,
no masks.
Good. Well, we'll keep an eye on shares of Morgan Stanley as well to wrap up here. Because obviously that company did have a very strong year.
How about the fact that Morgan Stanley was down 30 cents when it was first reported? Now, that guy, I want that guy who sold it. Because that guy, is he Mo? Is he Larry? Is he Shemp? Maybe he's Curly. Which guy is he?
$14.5 billion in fourth quarter revenues, $60 billion for the year. And again, a return on a tangible common equity of 20%.
I want to be
You've
in that
obviously
business.
lauded the business under James Gorman, who's been CEO for quite some time now and apparently will be for quite some more time to come. not to the chagrin of Morgan Stanley shareholders, it would seem, but they are not what they were. Obviously, asset management is such an important component of the overall.
They pivoted. They didn't want to be
business.
investigated by the government forever.
Right.
And they went into a business that people used to say, well, hold it, Carl, like, the really important people, when they go down the elevator and they're out. That hasn't proven to be the case at all. There's tremendous loyalty there. And a lot of that is a very good culture. I mean, you know, you got a 20% return on common equity. I remember when David said you'd never get more than 6 or 7.
I said never 10. I said never double digits.
Yeah, but 10
Just
trillion
correct the record, but I was dead wrong, but yes.